Stop thinking Apple is invincible. Seriously. If you own Apple stock and think they can just buy their way out of any problem, you need to understand what's happening with their AI chip strategy. Here is the counterintuitive truth that every Apple investor needs to know. Apple is nearing a $5 trillion valuation. But their in-house AI server chip is delayed. Baltra, the chip that was supposed to compete with Nvidia, isn't coming until 2029. That means Apple is running its most demanding AI tasks on Nvidia GPUs inside Google Cloud. Apple is now hunting for AI chip acquisitions. They've approached semiconductor startups about selling themselves. The information has confirmed banking discussions are happening. Tim Cook is handing the CEO role to John Ternus in September. And Apple's cash pile of $45.6 billion is now available for deals. Meanwhile, Apple, Goldman Sachs, and Chevron are powering the Dow. Up 8 to 12% in July. Apple near $5 trillion. Goldman over $1,100. Chevron testing its 50-day moving average. Let me break down all three stocks. I'll admit something. I saw Apple hit record highs and thought, they've figured everything out. Then I read about the AI chip delay. And I realized, Apple's vertical integration is hitting a wall. Today, I'm going to break down the three Dow leaders. By the end, you will understand why these three stocks are moving, and what Apple's AI chip acquisition strategy really means. Let's start with Apple's problem. The delay. Apple's in-house AI server chip, codenamed Baltra, was supposed to debut in 2026. Now it may not arrive until 2029. The performance gap. Apple's current AI servers use M2 Ultra chips. But they aren't fast enough for the largest AI models. The company cannot efficiently run Google's Gemini models on its own infrastructure. The result? Apple is relying on Nvidia GPUs inside Google Cloud for its most demanding AI tasks, including the Gemini-powered version of the new Siri. The acquisition strategy. Apple has been talking to bankers about possible acquisitions and has approached semiconductor startups about selling themselves. The company's $45.6 billion cash pile is now available for deals. The counterintuitive truth? Apple's vertical integration, building its own CPUs, GPUs, and neural engines, is the foundation of its $5 trillion valuation. But in AI, they're falling behind. Now let me show you what Apple is doing about the delay. The Broadcom deal. Apple has already committed $30 billion to chips from Broadcom, a partnership it extended to 2031. The deal will produce over 150 billion chips manufactured in the United States. The Q.ai acquisition. In January, Apple agreed to acquire Israeli AI startup Q.ai for nearly $2 billion, its second largest deal ever. Only the $3 billion Beats acquisition in 2014 was bigger. The strategy. Apple's $278 million buyout of PA Semi in 2008 laid the foundation for its entire chip business, A-series iPhone processors, M-series Mac chips. Now they're looking for the next PA Semi. The companies on the radar, AI chip startups with high valuations. Tenstorrent at $26 billion, founded by former Apple chip executive Jim Keller. Cerebras at $41.6 billion. Samba Nova at $11 billion. D-Matrix at $2.6 billion. The counterintuitive truth? Apple's vertical integration strategy is a strength, but it's also a weakness. When your in-house chip development falls behind, buying a startup is the fastest fix. Now let me talk about the stock. Current status. Apple is nearing a $5 trillion valuation for the first time. The stock hit its 15th intraday record of 2026 on Wednesday. The key level, $315. After surging above its previous record, Apple needs to hold $315 to confirm the breakout. The support levels. $300 is the psychological level and near the moving average. $280 is the previous breakout level. $250 is the major demand zone. The AI chip strategy impact. The Baltra delay and acquisition hunt are long-term moves. The stock is rising on AI optimism and the broader Dow rally. The counterintuitive truth? Apple's stock is hitting records despite the AI chip delay. The market is pricing in a fix. Acquisitions are the fix. Now let me talk about the second Dow leader. Goldman Sachs. The stock has now risen more than 150% from its post-Liberation Day low in April. The price is over $1,100. The Dow impact. At more than $1,100, Goldman is by far the highest-priced stock in the Dow. Since the Dow is a price-weighted index, Goldman has the greatest influence. The catalyst. Goldman broke above its June record following earnings. The move extends beyond Goldman. J.P. Morgan also hit a new record after reporting the highest quarterly profit in U.S. banking history. The key level. The breakout holds as long as the stock stays above roughly $1,120. The counterintuitive truth? Goldman's rally is about banking profits, not AI. Wall Street is making money, and Goldman is the biggest beneficiary. Now let me talk about the third Dow leader. Chevron. The stock lost just over 20% over the 3 months following its late March peak. Crude oil and energy shares began to recover in July. The current price is around $181.60. The key levels. The 50-day moving average is roughly $182. Chevron needs to break above this. $190 is back in view if the 50-day breaks. If it closes below $180, the stock could head to its 200-day moving average around $173. The 3 straight failed challenges. Chevron opened near $182 before turning lower, marking its 3rd straight failed challenge of the 50-day moving average. The counterintuitive truth? Chevron's move is about oil prices, not AI. Energy ranks 3rd among sectors this month, and Chevron is the leader. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1. The AI chip delay trap. Apple is nearing $5 trillion, but their AI server chip is delayed to 2029. The market is pricing in a fix. The acquisition hunt is that fix. Secret 2. The Dow dynamics reality. Goldman's price is over $1,100. In a price-weighted index, that means 1 Goldman point moves the Dow more than 1 Apple point. The Dow is barely budging this month, but these 3 stocks are carrying it. Secret 3. The 3 completely different stories signal. Apple is about AI acquisitions. Goldman is about banking profits. Chevron is about oil recovery. 1 rally, 3 completely different reasons. So what should you actually do with this information? If you own Apple stock, watch the $315 level. If Apple holds, the breakout is confirmed. If it falls below, expect consolidation. Watch for acquisition news, that's the catalyst. If you own Goldman Sachs, the banking renaissance is real. But at $1,100, the stock is extended. Watch for pullbacks to $1,000 to $1,050 for entry. If you own Chevron, the 50-day moving average at $182 is the key. If Chevron breaks above, $190 is next. If it fails, $173 is support. Here's my question for you. Which of these 3 Dow leaders do you think has the most upside, and which one are you most worried about? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on the stocks driving the Dow and the companies reshaping the industry. I'll see you in the next video.